I think we did it. I think we're live. What's up, everybody? Thank you for joining us on this wonderful, joyous day. It is the FOMC. We started doing these years ago, not knowing what it was, and we'll continue doing them forever just because this is a rather boring event, and we try to make them a little bit more fun, a little bit more interesting. So bear with me if I'm goofy or odd or make a mistake. We're just going to try to have a good time here. Here's the schedule to break it down for the new people out there. We're going live now. We have less than 30 minutes until the interest rate decision is live. Live, meaning published out into the web, and we will all get that information here together. And I'm going to temper expectations. No change is almost certainly what's going to happen, but there's more to this meeting than just an interest rate change. I know over the last few years that's become a big hype for us. It's become kind of the core content when we see that interest rate change. But we have other important things to look for today, and we're going to go over them. That's right. We're going to go over them together before the live starts, or before Chair Powell starts speaking. So 2:30, in a little bit less than an hour, Chair Powell himself will join us live. And at 3 o'clock-ish, usually we get questions from the reporter. And I'm going to tell you guys, do not miss this one. These questions have become more and more unhinged. They've become more and more ballsy, kind of in your face, take no prisoners. They've been getting more fun. So stick around for that. If you have to go during the stream, that's okay. Leave a tab open if you can. If not, we will catch you at a different time. I'm going to also, as I do every FOMC, warn you guys about volatility. These events are extremely volatile. This one especially, kind of gearing up that way. We didn't have an FOMC last month, so this is the gap month. Likely bringing extra volatility today, and I'm going to tell you, trading these is a bad idea. It's a great way to lose money. Typically, we have what we call the blueprint of price action. We'll go over that as well, and that will likely explain why you aren't going to win a trade today, but practice your own risk management, do your own thing. So while I don't think we're going to get an interest rate decision, we have kind of changed topics here. We're looking more at the balance sheet, or quantitative tightening and quantitative easing. And this is largely when the Fed imagines or unimagines money into the economy. At the minutes from the last FOMC in January, let me pull these up so I can read the quote here so I don't get it wrong. The minutes of on January, the minutes basically said that the Federal Reserve's balance sheet policy, respondents saw the process of runoff concluding by mid-2025. What that means is they expect not necessarily quantitative easing, but quantitative tightening to come to an end, which is a good thing for our bags, by the middle of this year. Now, we're already at March's meeting. We do have a meeting in April and in May and in June, right? Which could mean that the participants are looking to potentially announce quantitative tightening is over as early as this meeting. I wouldn't hold our breath, but if we did, that would be a huge mix-up. That would be very spicy for markets. That might be the most volatile outcome, but we may expect that as late as maybe even into September of this year. Chair Powell marked that we have ample reserves, and that did in January, and that suggested that it was not necessarily coming to an end quickly. We have had some inflation readings since then in the last meeting, since the last meeting that have been favorable, some job numbers that have been interesting. Really, we're going to be reading between the lines today. So I just want to take a second and say, please, if you enjoy this content, if you're here having a good time, make sure you're chatting in the live chat, voting in the polls, hyping it up in general. Hit that like button, subscribe, and let's get into the main content here. Let's jump in. This is our classic setup for the FOMC. We have the interest rate decision marked here on the chart, along with when Chair Powell begins speaking. You can see 2 and 2:30 p.m. East. Let's go over really quick, kind of the FOMC price action blueprint. Now, it's been tradable in the past, but again, my whole thing here is warning you or cautioning you against taking on risk right now. We have very commonly seen price action that resembles the previous FOMCs. There, for some reason, seems to be a pattern. That pattern is whatever direction we are trending into the interest rate decision. So for now, I'll say, I guess we're trending down. That could change. I mean, if it reverses right now into the interest rate decision, but for now, trending down and on the decision. So before Chair Powell speaks, we tend to see a reversal in price, whatever direction it's heading. So heading down, oh, well, heading down for real. I think it liked this line a little too much. We tend to see that reverse until Chair Powell himself speaks. And typically what we see is longs wiped out, a move to shorts wiped out. And then after Chair Powell speaks, it relatively ends up where it was. Meaning whether you were long or short, no matter what, wow, yeah, volatility's kicking up. We were not joking. No matter what direction you picked, odds are you're getting stopped out and losing money. So just be careful today. Watch for that S. Watch for the volatility. Watch for these swings back and forth. Underneath Bitcoin, of course, we have the dollar seated on our chart. Same things marked out here. The dollar has been eating it, actually. I'm so used to saying the dollar has been very strong. The dollar has been eating it over the last, 2-3 months here of this year, down to, wow, not that far. November 24 lows at 103. This is a yearly major support level for the dollar, and we can see that sell-off losing a little momentum there, maybe looking for a bounce of some kind. We'll find out here. We'll find out together. Stocks, of course, not looking super strong. Bitcoin not looking super strong. Gold really taking the cake over the last few weeks or months here. Gold at all-time highs. Gold really hanging out up here at new all-time highs, unlike everything else. Maybe reflecting some uncertainty in the markets ahead. A little loss of security maybe into this year as things have gotten a lot more chaotic, in my opinion. Things have gotten really, really crazy on an economic level. Gold reflecting that. I think gold is likely to move on to more all-time highs this year, even though it seems to be taking a break right here in this hour. We did have an all-time high earlier today. Many people out there think Bitcoin and gold move together. Well, hurry up, Bitcoin. Get on it. You heard the people. Do it and catch up. We need some all-time highs. So let me do this. Let me pull up the chat. Let me see what everyone's looking at here. I had to restart the live. It got very buggy when I hit the go live button earlier. Hopefully everything's stable. Everything is checking it out here. Hopefully everything's stable and viewable, and the audio's good and the video's good. Let me know if there's any issues here. I hear people subscribing. What's up, Walter Hernandez? My guy. Appreciate you. Reminder, the more you guys like, subscribe, vote in the poll, chat in the live, the more YouTube says people are enjoying this content. I'll show it to more people. It's not placebo. It does do something. It does make a difference. It is important. So I appreciate everybody who has been so great at that day in and day out here, hyping up the streams, getting new eyes in here. I wanted to show you guys, this is the notes. We went over this last month, but this is the quote that basically pertains to the balance sheet here. And in their expectations of Federal Reserve balance sheet policy, survey respondents saw the process of runoff concluding. It's very weird language. By mid-2025, that's what I read earlier. I believe there's only one other reference in the notes, slightly lower here. However, the manager cautioned that debt limit situation may cloud the signals provided by the indicators. In addition, reserves might decline quickly. This is the interesting part. Quickly upon resolution of the debt limit, and at the current pace of balance sheet runoff, might potentially reach levels below those viewed by the committee as appropriate. So those are, I believe, the only two references, right? Security market after the eventual conclusion, balance sheet, these strategies. I think those are the ones of importance. Yeah, loan balances, that moves on to something else. Just to show you my sources, I'm not just making it up. Markets here largely pricing in nothing happening today, at least when it comes to interest rate changes. 98% chance, current probability actually at 100%, an impossible percent. 100% probability of nothing happening today. I believe Polymarket also has a market for this, and they're roughly at 100% no interest rate change today. So kind of beyond the interest rate decision, we're going to be looking for things. A clue, a little pro tip clue here. is going to be Powell's tone on inflation. We have to read between the lines. We got to get creative. His tone on inflation. So does he stress patience, which we've seen him stress in the past, or is he highlighting progress? Is he stressing patience or progress? Are they making progress towards these goals, their dual mandate, or do we need to practice patience? I think that will largely define the tone of hawkish or bearish, or hawkish or dovish. The big points of today, kind of, I'll just summarize them here. Any changes to the schedule of quantitative tightening and quantitative easing, I think, are going to be the biggest, most important things that could be said today. Outside, of course, of the curveball of an interest rate cut or hike, which markets are looking at about a 0% chance of that. Any date changes, honestly, just any comment on it. Doesn't even matter if it's a date change, even if it's for on course. Participants, are still looking at mid this year. Anything, any kind of change, any kind of tone, that's going to be big money. They may not say quantitative tightening or easing. They commonly will say balance sheet runoff. I suppose we could hear Chair Powell comment on the current administration, though he has remained largely against that, really commenting on anything going on. I think that's good. But he could comment on tariffs or kind of changing economic landscapes in the world. That could be big as well. The Bitcoin reserve or crypto reserve stockpile things that have been mentioned over the last month, it's possible that something is said. Stable coins, I believe, kind of snuck in as the last question on the last FOMC. So anything pertaining to crypto, obviously going to be big. And did I miss anything else? I really think I covered that pretty solidly. What do you think, boys? Did I cover that pretty good? Nice 10-15 minute intro. Big XRP news. Dom is correct. He will not comment on the administration. I agree, Jason. A lot of you guys hate Jerome Powell for some reason. You're welcome to your opinion, right? We don't have to love the same things. That's what makes the world great. But the dude is like the best politician ever, man. It is amazing how much pressure he's under and his ability to navigate and stick to his lane, stick to the things he's supposed to be focusing on. And despite speaking in front of Congress and having hours of being drilled by these people who are trying to get him to just make one mistake, he doesn't. He sticks to what he's supposed to do. He doesn't interject his opinion. He never operates on opinion. It is always on the data. He says it over and over and over again. Maybe that'll be a big surprise if he finds some data. That'd be wild. Bad Fox, thank you, darling. Covered everything like a boss. How you doing, darling? Shout out to all the ladies. Yo, my man Crypto Face in the chat is a Chair Powell fan. Dude, exactly. Thank you, man. Crypto Face likes Powell. I don't know how you wouldn't like Powell, man. I get that he doesn't say the things that you want, and largely YouTube is people searching for people saying the things you want to hear. But the things you want to hear, dude, just record yourself and listen to it on repeat. You know what I mean? You don't gotta have someone else say it. You don't have to have these people saying it. He says what he believes is best for the country. That's my opinion. I think that's how he operates, which is not always the best short term for us. It's not always what we want to hear, but I love the man. By the way, shout out to Crypto Face, my bro. He'll be in Vegas. He's going to be in Vegas. I'm going to be in Vegas for Bitcoin 2025. My link is in the video description below. Grab your tickets. And I meant to shill Crypto Face. Subscribe to my brother, to my man, Crypto Face. Great dude. Huge streamer. Inspiration to all of us. Let me double check, make sure that link's in there. Should be in there. Got quite a few. Yeah, it's in there. TomCount.io/Bitcoin BTC 2025. It's in there. We got quite a few viewers, not a lot of likes. Can we get those numbers up? Can we get the numbers up? We have 300 likes, guys. We have like thousands of viewers. Let's get more likes. We got it. Let's get 1,000 likes right now. He's the best politician ever. I agree, JTA. Best man for the job. I genuinely do not know who would do a better job than Chair Powell. In reality, you could name people, and what would end up happening is they would do maybe what we want, right? They might do the short-term, short-sighted, what we want decisions, but that's not what we want. We want the bigger picture decisions. We want at least someone somewhere in the entire country looking kind of more long-term than just next quarter, next month, next week. We need a little long-term view, and I think Chair Powell's done a great job. But you're welcome to your own opinions. I ain't gonna fight you here. What's up, Raz Wojak? How you bros doing? Market Cypher, love Market Cypher. You're bad, Christopher? You ain't bad, you're good. Without Gina, I'm dead inside. Boss Fountain, let's take a moment here and mourn the loss of Gina. It truly is sad. It didn't feel real. I didn't want it to be true, but our love, Gina. She's moved on to greener pastures. No, she didn't die, though she's died in our hearts largely. Just take a moment and remember her. Gina was the best news correspondent ever to be at any of the FOMCs. She was the highlight of these streams for many years. And now she has moved on to doing something in Europe. I don't know, but she's essentially dead to us. I hope she's doing well. Come back to me, Gina. I love you, darling. I mean, did I just say that? Oh, my. Oh, my. Get a little Gina in chat. I'm putting them emojis in chat. There we go. Do I have any memberships to gift out? I don't think so. Free milestone membership gifting. I might give some away. I was going to give some away, burn some time. We've got 10 minutes until the interest rate decision is in. If you want to get one of these free memberships gifted to you, make sure you've opted into them. Make sure you've engaged with the stream. YouTube gives them out randomly. She is missed, Seth. That is right. LFG, green tie day, Deegan. That would be nice. That would be nice. I'm not going to hold my breath. Markets look like a dog. You guys know I love being bullish. It's the cornerstone of my existence. It's largely my identity. Love being bullish. I love the color green. I love candles that are going up. But man, it is rough to be bullish right here. That being said, Ace of Hearts won. What's up, man? You deserve it. You're always here. That being said, it doesn't mean we can't rally from here. Doesn't mean we can't just go straight up. Doesn't mean we can't go straight up to an all-time high. But the probability of that, or at least what we're seeing here, without some kind of incredible catalyst, does not seem likely. Even just to pick up or down from here, looking at this chart, it would be a hard call to pick up. Our 200 daily moving average, well, we have already tangoed with this. In fact, we've tangoed with it every year in the summer on this run to the upside. 200 daily is not a bullish thing to be underneath, to be hanging out here. Almost all month now. We have 10 bars under the 200 day. We have traded above it multiple times, even closed a daily above it 1 or 2 times here in this range before falling back down. This is not the super bullish environment. This is not the pump to the moon. Not saying it can't. Like I said, anything's possible. But this is just not a nice setup. This doesn't look good. We're not getting any like super strong, awesome bullish signals. I would love to see that. I welcome them. I mean, we got bull divergence on our RSI lows. Like, that is it. That is not enough. It's not enough for me to say all in long, baby. Let's go. This chart has looked relatively the same since the end of February. Just no strength. Doesn't seem like buyers are coming in. Something of note related to this, though, is March options are going to be expiring. Is it Friday? Is it this Friday? Very soon. Those are quarterly options. That is a big potential mix-up in markets. Money shifting from hands, from buyers to sellers, from sellers to buyers, in large quantities, refreshing. Commonly, we do see a vibe change as the quarters roll over, as we transition from Q1 to Q2. Over the last, 2 years in a row, the transition from Q1 to Q2 has been pump brains in Q1, and then Q2, Q3 largely sideways and down, so a complete reversal kind of that energy. We didn't really get that this quarter, right? We had a pump in Q4. Now in Q1, we've largely been down. So hopefully, this is some good hopium. Hopefully, that means that the vibe change in Q2 is some kind of rally, right? That's about as bullish as I can get. And you guys know I love being bullish. Stocks are not in much better position. You know what? We'll get into stocks if we have enough time here. XRP. A lot of XRP fans out there. Having a good day. You guys are having a good day. XRP officially, I thought this happened last week, but officially had their SEC case dropped against them. Congrats, XR peoples. I'm sure you're celebrating that big time. The candles, the chart, I don't know if it's really as excited as maybe as big this news is. Coming off 230 support, right to 257 resistance. We've seen the candle pull back. I would have liked to see that pump a little harder, personally. It's still technically a lower high. If XRP can hold on to a higher low here, anything above 230, you may be retargeting $3. I think we're going to, honestly, I think we're going to have to see what happens today at this meeting. And then I think we're going to have to see what happens maybe on March expirations or into April. I would love to be wrong. I just don't see a big mix-up coming until April. I would love to be wrong. Please be wrong. In fact, universe, take that. Allow me to have jinxed that and just pump it, please. But this chart definitely looking better than some. I'm still worried about testing of this support at $2 over and over and over again. This isn't a great pattern, but we've seen crazier things happen in crypto. Let's see how this low holds. What's up, my man? 𝐂𝐻 subscribing. I see you. Jose Valencia Thomas Domos. What's up, man? Walter Hernandez, FMRO Visco, Mike, Philip, Nix. If you're out there and you have not subscribed, take a moment. Subscribe right now. We have just minutes until the interest rate decision is out. So let's we're here together. Likely nothing. Just play the Jerome Powell will speak in 30 minutes. He'll speak in 30 minutes. The interest rate decision will be here in like 3 minutes. 99% chance is going to be 0, right? It's going to be nothing. Alexo Crypto, you're sick. You should be resting, my friend. What's up with that? Good to see you, Alexo. Guys, subscribe to Alexo. Alexo, the man. Right here. I'll put his link in the chat. Here you go, guys. Subscribe to Alexo Crypto. This man, top analyst in our Crown Crypto Trading Group, our new group launched just in January. Top analyst here. This man is live, constantly, exclusive live streams. Go over to joincrowncrypto.com. You can get a free week trial. There is daily exclusive live streams, trade setups, analysis, signals, everything that you need in a group. Get a free week trial. Check it out. Q&A. I'm going to redo mine. I'm going to be doing like a Q&A trading thing every week in it. So check it out. Make sure you join our free Discord. I'm just going to get the shills in while I have a second here. www.discord.gg. Discord.gg/TomCrown. I got thrown off my game there. Check out the links in the video description below, the affiliate links, including the Bitcoin conference link down there. Sign up using any of my links, and you will get into our VIP section in our Discord. Very good stuff. Got distracted. Shouting out Alexo. Love Alexo. I heard you're sick, though, brother. You should be resting. Gotta take care of yourself. Where were we at? Stocks. Largely in the same position as crypto, not doing much. Down since February. Man, where's this dead cat bounce, right? Maybe it's coming. Maybe it's coming. I think it's coming. What's up, Cactus Leo, my brother? Good to see you. This was our analysis from earlier in the week, looking at a flat top structure. Tuesday's lows kind of invalidated this, but I'll say it seems to be back on course. 85,300 untapped. Actually, I was looking for that on Monday. Untapped here. I do like this short time frame pattern. I do like resistance being tested with support coming in higher and higher. I am not convinced, though, that this necessarily will take us to new all-time highs. I think looking for some kind of sweep of liquidity up here, but I think the shorter time frame still looking for a little bit of upside. On the daily we just looked at a bit ago, this is kind of the general consensus of, general consensus of the market for Bitcoin. This is kind of what people are looking for, if not lower at this point. I think this is very valid. I think anywhere from 73 to 71.2 as support. If we see a sell-off continue into March or even early April, I think is a great place to look for support. Nothing's really changed here. Not a lot of change going on in these charts, and that is because nothing has freaking happened. It is wild. It is wild. I cannot believe we're at the same price that we were at all year, it seems. Here we go. All right, so as you can tell by this chart, my friends, it is time. They're just seconds away. If you want to, join us in the ceremonial Googling, open up a tab, get ready to search for the interest rate decision, and be the first one to put it in the chat with a source. This is time-honored tradition. Go. Go. Pending. More sideways for search. Got to search. I didn't hype it up as much as I usually do. I kind of forgot. Google it. Give me a source. 4.5 Forex Factory. Andrew Davies. No change Forex Factories. 4.5. That's what CryptoCraft is saying. So exactly as we expected. Let's check back in on price action here. I hate to say it. I hate to say it. I don't hate to say it. Wow, this is actually spicy as hell. The dollar tanking on this, and Bitcoin getting a nice green candle here. Reminder, at the beginning of the show, we literally said, I wonder where these numbers were. I wonder if I can actually just do this. Literally said, be careful trading this move because this is what we commonly see. Let's see if I can get these arrows back. Yeah. They're gone or not gone. Oh, wow. I don't know why I'm doing this. At this point, this just seems silly. Yeah. That seems silly. Let's see if I get it all back quick. Bitcoin pumping on the news of nothing for some reason. The dollar taking a little bit of a shiner to the face here. All right, let's just stick with this. At the beginning of the episode, you can go back and scroll. We said the direction that price is moving. What happens on these? Typically, we see it reverse on the news, and then we see it reverse again one more time, leaving everyone wrecked. And it looks usually something like this. Wow. This is two FOMCs in a row where it's like perfectly hit. That's wild. That is bonkers. Hopefully nobody got too wrecked here. Let's zoom in and see the damage. That is a spicy 1 minute candle. But we are on the 1 minute. So don't get too excited. Let me get these bar change values, which for some reason are not on my chart. That 1 minute candle looked big. It looked big, but actually only traded up 1%. And in 1 minute, that is reasonably a large candle. The dollar down 0.12% in 1 minute. That is actually pretty big for the dollar. Let's zoom out here. Let's get rid of this. And is there any damage done? Did this? I wonder if this actually just hit. Nope. Any damage done? Not really. Slightly higher high here for Bitcoin over Tuesday into today's price action. That wick obviously not looking good, but this is a fresh hour candle. The dollar actually looking worse, man. The dollar and Bitcoin down for some reason. I don't like that setup. Dollar and Bitcoin down here. Dollar suffering. Get my bearish engulfing the hour before for the dollar. 4 hour candle, man, that's looking very weak. That's very weak. Yeesh. Nope. Wow. Wow. I'm just so used to like no volatility now that everything looks exciting. Though that was a nice little pop. The dollar's still taking it. Interesting here. Bitcoin largely back to where it was. The dollar actually holding on to a little bit of that red. That was spicy, but we have, reminder, the even spicier event. So that is what the market expected. There was no interest rate change. We just got this info 3 minutes ago. Sure, Powell will be speaking live, commenting on the Fed's decision in just under half an hour. Every time is the biggest FOMC ever. Well, I mean, is technically true. It's technically true. 16-year theory. Oh, man. Oh, man. Oh, man. How much Bitcoin do you want a day? Do you want to buy today, set a price? I mean, that's always good advice. Nice little whipsaw up. Price already back to where it started. But what's interesting here is the dollar. Ooh, I'm going to sneeze. Ugh, I need tissues. The dollar continuing to dive here. That's actually unexpected for me. Let's pull up gold as well. How's gold faring on this? Gold. God, all the good stuff's happening to gold lately, and it's annoying me. Gold pumping on that candle with the corn, but unlike the corn, keeping those gains, trading sideways. That would have been wild if it moved to all-time high. Did not. Just a nice little pop for gold there. The dollar just keeps fading. Huh. Let's get the S&P on here. What's the S&P at? pop for the S&P. So it really looks like the dollar has fared the worst on this. And then oddly, for my opinion, Bitcoin faring not so great as it's just back to where it was. And we see stocks hold some of the gains, and gold really just continuing to truck up. Gold and stocks faring better off of the no decision. It's kind of weird because this is what everyone expected, and we're getting a mix up. What's here to me is the dollar falling more. What do you guys think, chat? I've been talking for like 40 minutes. Let me see what you guys are looking at. John Collett, the Federal Reserve voted 11-1 to slow the reduction in its balance sheet, rolling off just $5 billion. So you cited MW. I'm not sure. Market Watch. Where is Market Watch getting this though? That's what I'm curious about. Oh no, Ricky, you gave 500 XP to a scam. Ah, bro. Guys, just so you know, on YouTube, any live streams that are getting you to send any kind of crypto, XRP, Bitcoin, Ethereum, anything offering to double it, honestly, any stream with Elon Musk, Michael Saylor, anything with a QR code, it's all a scam on YouTube. No one is ever going to double your crypto. I know that doesn't help you now, Ricky. Heart goes out to you, brother. Take it as a learning lesson. Hopefully that saves you from a bigger loss in the future. Scams are just ubiquitous, man. In crypto, there's nobody there to help you. There's no backsies. Scammers are everywhere, and you got to protect yourself. You could be the best trader or an investor in the world. You might still end up with nothing if you fall for the wrong scam. When does it start? 24 minutes. 38K, you guys are ridiculous. I know, remains unchanged. I wonder where Market Watch is getting that, though, because where would they have gotten that from? I think we just get the interest rate decision. Yeah, I know. No one's doubling your Bitcoin. This is big, though. Okay, so Sebastian, someone else commenting on the Fed voting to slow Treasury runoff. That's big. In the intro of this stream, in the intro of today, that was a big highlight, if not the biggest highlight was, well, we're looking at 100% chance basically of no interest rate change. But that doesn't mean that this isn't the most exciting, biggest FOMC ever, because we can have, honestly, some more important things talked about, or at least what I think the market is watching right now. Where did my notes go? My notes disappeared. There he is. We talked about how in the last minutes, or the minutes from January's FOMC, that most participants saw quantitative tightening or balance sheet runoff coming to an end mid-2025 of this year. That could mean this FOMC. It could mean the April, May, June. Could really be all the way out to, like, I'd say about September, because that's kind of past mid-2025. A reminder that that was a delay from the original target to end quantitative tightening. This is what markets are looking at, or at least what crypto is looking at right now. Originally, it was supposed to be earlier. And we said any mention of the dates changing on quantitative tightening or easing of balance sheet runoff, dates, amounts, anything is probably the biggest, most important things he could talk about for us. You guys are saying that that Market Watch is reporting that is huge. That is very big. The only way to double your crypto is by researching in time. Yeah, dude, do not send your crypto to any video on YouTube. It doesn't matter if they have 1 million live viewers, 1 million subscribers on their account. It's all scams, bro. They just hijack the accounts and change their names and run scam videos. You lost $200 to a fake sailor video. I'm sorry to hear that, Byron. Happens to the best of us, my friend. It really does. They'll get you. They'll get you one way or another. Just be aware that there is always someone trying to steal your crypto from you. Gotta be a little paranoid. To reiterate, we saw a nice little bounce here into a sell-off. The dollar's still down. Bitcoin's still down. Gold seemingly the winner at the moment. The Fed voting 11-1 to slow down quantitative tightening, or the balance sheet runoff, from 25 billion to 5 billion, something like that. Well, I guess we'll get more info on that. I haven't seen that. You guys are reporting that to me live. That's one reason I love doing these. Everyone's here. We have so many different views, so many different opinions. We have so many eyes out there able to grab this info quickly. Let me look this up. Market Watch Fed Treasury, whatever, balance sheet runoff. Let's see if I can find this article. Market Watch, Fed sticks with projection of 2 interest rate cuts this year despite growing uncertainty about the outlook. I thought that's where we were at already, right? We were at 2. Federal Reserve said that uncertainty about the economy had increased, but they stuck to their prior forecast. Interesting. The Fed was upbeat about the economy in its statement, saying growth was solid, but the details of their individual forecast show more worries about both higher inflation and a slowing economy. That does not look good for cuts, but cuts are not necessarily what we need right now or looking for right now. The Fed's decision today keeps the benchmark rate of 4.25 to 4.5%. Fed officials have said this level of rates is restrictive, putting downward pressure on growth. Beginning next month, here it is. Here's the big stuff. This is the bread and butter. This is what we wanted to hear, my friends. Beginning in next month, the Fed will only let $5 billion worth of treasuries mature, not to be replaced on its balance sheet every month. Currently, yep, that was correct. The cap is at $25 billion. That's a big cut. I remember when they cut from 60 down to 25, and I was like, that's huge. I can't believe they're cutting so much. This is even bigger percentage-wise. Cutting down 80%. Cutting 80% of their balance sheet runoff from $25 billion down to just $5 billion. The Fed will continue to allow $25 billion of mortgage-backed securities to roll off its books every month. In a surprise decision, Fed Governor Christopher Waller dissented from the shift in balance sheet policy, arguing for no change. Screw you, Waller. No, I'm just kidding. Overall, the economy has lost a good bit of steam since the beginning of the year, given the uncertainty, this is Market Watch, surrounding President Donald Trump's tariff and immigration policies. Economists said that the Fed can't be proactive to fight this slowdown because inflation has remained stubbornly above the Fed's 2% target, surprising no one. The White House plans to announce reciprocal tariffs on trading partners on April 2nd, and we are quickly coming up to that date. Thank goodness not April 1st. Economists think the tariffs will immediately push up inflation and cause growth to stagnate, creating a dilemma for the central bankers. It is updated economic forecast. The Fed projected moderately slower growth, somewhat higher inflation, and slightly higher unemployment rates this year. But in a special section that asked about the risks to the outlook, officials showed concern about outcomes potentially worsening. That was pretty dang bearish. That was not the most bearish or not the most bullish article I've ever read. Fed seems pretty shaky here. I am glad that they're going to slow the runoff. They are slowing down quantitative tightening, but they are not committing to easing in any capacity at this point. Really, the slowdown, I think, is just in preparation for their mid-year end to quantitative tightening, which is still good. That's good. Hi, Tom. After how many days? I don't know, little fox. What are you asking? Where's the dump? Not sure. Powell hasn't spoke yet. Hawkish tone for sure. Okay, I'll take this. I'll take this little candle here. Bitcoin making a spicy move, it seems. The dollar showing no strength off of this interest rate. No change decision. Bitcoin recovering a little. It was looking pretty rough there for a moment. Now coming back to the small high. Actually, we were zoomed in and it looked big. And the initial reaction was pretty volatile, but overall, for FOMCs, this is actually one of the chiller ones. This is a small range. It's a small range, 1-2%. That's not that big. 1.6. There may be more coming, TBD, as the market unpacks this information. I mean, that is big. I want to say this is bigger than last month, or not last month because we didn't have one, on January. Bigger than January. Reducing the runoff from 25 to 5 billion is big. Even just commenting on that is big because we weren't sure if we were going to even get an update. I think that's pretty spicy. So far, Purple Tie Day, Colin Klopper, probably. So far, actually, this has been pretty big. This has been pretty big. It's living up to its name. We have 15 minutes until Chair Powell speaks live. Just 15 minutes. What should we do, fam? If you're here today, tighten your neck braces. If you're here today, I want you to really quickly make sure you've hit the like button. please. We need more likes on the stream. Smash the likes. If you haven't subscribed, join us. Your name will pop up. I'll shout you out. Join our fam here. And put a message in the live chat, could you? Let's see. Let's see who's here. I can see Ace of Hearts 420, my friend. Congrats on that membership. Cactus Leo, Colin Clopper, B Rocks. What's up, bro? Called out. Checkster Cat, Cosmo, Crispy. What's up, Curb Shifter, DacTube, Oda, Deegan, Desmond the Moon Bear, DJ Monty. What's up, brothers? Burke, Alex O Crypto. Shouted you out earlier. You're still here. Bitcoin making a little move. Making a little move. I'll take it. DTP TV. What's up, brother? DXB Crypto, M Jaqua. What's up? Folsom Hodel, Get 3 Oak, Harry Hood, Hosty Garage Door. What's up, Hendrick? ENF, my friend, Ian Mackey. Itadaki. What's up, friend? JD, J Anthony, Jack W, Jazzy Orange. Good name. Jeff Belbin, Jerome, Jove. We have so many names here. Holy shit, this might be the biggest stream of the year. Wow. Wow. Are you feeling the energy? Are you feeling it? What's up, Julio? Johnny Hanna, how are you? Karar, Chris Pax, another YouTuber. How you doing, Chris? How's Doge doing? Legend League, Little Fox, M Stone, how are you, friend? Marcus, Marlon Brando, Martinez, Marksy Marks, ooh, Matthew Schmidt, the captain is here. Michael Norris, Michael Picanzo, Miran, Mr. Bobby Fresh, Mr. Techno Goody, Musil, Baluch, Ninja Glock, Noir Games, Paper Beats Rock. I'm going to keep doing names because Bitcoin's rallying as I'm doing this. Paul Wood, Patrick Ugolini, Pauly Profit Prime, Pwned for Bull, RG Raging. Who else is here? If you're here today, put your name in the chat. Let me shout you out. Robo Balls, Ronald, Ronan, RS Miller, Arturo, Ryan Hogan. Bitcoin's pumping as I say these names. I can't stop. Ryan Loco, Scott Watson, Seb B, Sebastian, Sexiandra. Interesting name. Shrink Tech, Soft Shell, Sony, St. Clair, Stay Calm, Streamlabs, Sven will do it. T-Bone, what's up, T-Bone? Pickle, Tom Hoffelnick, Tom and Moose, Tony Rosas, Trader Bot Win, Trey Roberts Trip, UK API, Vlad A, Vlad D, Worth, Weefa, Wojak Zima, Zufree Family, One Up, Adri, 420 Blaze It, who else is here? Al Muscari, Alex Wells. Man, so many names. On Anito, Asafurban, Atone, Boop. Dude, there's so many people. By the time I get to the bottom, there's like a whole fresh round of names. What's up, Baxabram, Behav, BB? Who else did I miss? I didn't mean it. There's a lot of names. Good day to you, friends. Hello from Cali. Hello, Cali. It's probably a beautiful day in Cali. It's a beautiful day here. Can't wait to actually go outside and enjoy it. But there's nothing I'd rather be doing than being right here. Where's Gina? Man, maybe Gina will just randomly show up one of these days. Just make a surprise appearance. What's up, Janix? We out here? Yeah, we are. Cap or die. Say it. Did you know? Extreme Challenges. Good name. Oh, Gina. Oh, Gina. Someday. I hope she's doing well. Someone should check up on her. Keep it pumping, dude, TGB. I hope so, man. That's what I'm looking for. I need to interview Gina. That's a beautiful idea. What's up, Tradefly? Another YouTuber in the house, Tradefly, my friend. Good to have you. Would I do a live stream with Gina? Absolutely. 1000%. That's like a dream of mine, maybe. What's up, Bean Trader? Yo. Boss Mac, my friend. Yosef, Larry, in the house. Pogo Stick. AC, the Federal Reserve should be audited, then abolished. Private bankers have no business controlling the US dollar. I mean, there's some, there's a lot of opinions around it. A lot of opinions around it. Audited for what, I wonder? Like they don't get federal funding. I don't know. I'm down for audit them. See what happens. I'm all about auditing things. What's up, JD, Bill, Mega Rain, Nikki, Gabriel? You're new here. Welcome, Hasham. Welcome. You found the right spot. This is the home of the FOMC stream. We are here and live and together on this wonderful, wonderful Chirpow day. We got 10 minutes till Chirpow is live. I cannot wait. We're going to try to make it fun. We got some big news. While there is no interest rate cut, as we said, if you missed the beginning actually of the stream, it aged very well. We had a little intro of what to expect. There was no interest rate cut as expected by the market. However, that wasn't the spiciest thing that could happen. The spicier things that we are looking for is any mention of the balance sheet runoff, anything about quantitative tightening or easing. And apparently, I'm not really sure where MarketWatch is getting this, but apparently, MarketWatch reporting that the Fed has voted 11-1, only one dissenting Waller, to reduce the rate of essentially quantitative tightening from 25 billion down to 5 billion, which is an 80% reduction. I would say that's pretty freaking big. I would say that is living up to the name of the biggest FOMC ever. And when you look at the charts, here we go. Stocks enjoying, stocks thriving off of this. Let's see. Right here was that info, the no rate cut, no hike, but balance sheet change, stocks holding their highs, setting higher highs. Very zoomed in, however. Still at a lower high for the day, but certainly drinking up some of this decision. And I like that. I think that makes sense. Gold also holding strong after the decision here, rallying to, well, it looks like intra-hour highs. Not really even that crazy, but gold on a ripper, hitting new all-time highs today with no signs of stopping yet. Gold, man, really enjoying this uncertainty. I feel like when we say markets don't like uncertainty, what we mean is risk on, really anything but safety assets. I feel like maybe safety assets enjoy uncertainty. Maybe. Gold seems to be. Always a good time. Always a good time. They already made the decision. So they make the decisions before the FOMC. They release them at 2 p.m. So it's 21 minutes ago. We were live for that. And then Chairman Powell speaks at 2:30, which is less than 10 minutes from now. Why they do it this way, I don't really know. That's just the way they've always done it, I guess. Beats me. Gold is loving it, dude. Gold is drinking down the spice today, just like we are. Give me a sec here. Got to make sure everything is operational for when they go live. Okay. Make sure everything is operational here. Pull up. Headline video. There. You think I would have done this before, and typically I do, but I don't know. I was busy doing other stuff today. I was outside due to the weather. It's like almost 70 degrees here, and it felt amazing to be outside. If it's amazing outside today, you should spend some time outside. If it's not amazing outside today, wherever you are, then F it. Screw it. But you should if it is. After Chairman Powell speaks, though. That'll be in 7 minutes. 7 minutes to go. We're going to watch it live together. We're going to be watching for any additional or further information about the Fed balance sheet, about quantitative tightening and easing, about inflation. We're going to be looking for their general tone of inflation, whether they are basically preaching patience or preaching progress. It's the theme of today. I have a feeling it's going to be patience, because we have not seen that 2% target hit. Not even close. But, okay. Good. This is operational. That's operational. Let's do the audio check. That's going to need to come up. There we go. Better. All right. I think we're good to go. Purple tie opium. It's a weird place at the back of your wardrobe. What's up? What's up, Alex Wells? Flajuta Bus. Purple tie? What are the tie colors? Blue, red, purple? Green, maybe. You live in Washington State. What does nice outside mean? I wouldn't know. I wouldn't know what that means for you, my friend. Would not know. I don't even know what the temperature is now, so I couldn't tell you. It's like almost 70 here and sunny. That's what I mean. Here we go. Here's the definitive decision. If going outside makes you feel good and happy, make sure you get some outside time today. You don't have to go for a run or anything, but just get out there, get in the sun, get a little bit of that vitamin D. Green tie, we pump to infinity. That'd be good. Let me see the the poll. Almost 3,000 votes on this poll. I feel like we could do better than that, guys. I feel like we need more likes and we need more votes on these polls. Don't slack. We need more hype. But we have almost 3,000 votes. Today's meeting neutral. taking the lead at 38%. Hawkish, dovish, relatively split. You know, neutral might not be the winner here. I want to say with the reduction of the balance sheet runoff, I want to say that that's getting a little dovey. It's getting a little bully. You love vitamin D. Julie, you were like the first one here, Julie Kennis. Shout out to you. I saw your message early. You're locked in. You're loaded. How are you guys feeling? How are you guys feeling? Typal? All right, Typal. What colors? Purple, blue? Can you switch it to the live stream? The real right high off music. This is it. There's nothing here yet. It's just music. As soon as it is, though, as soon as it's on, you better believe we'll be the first ones here. Chirpow's tie. What does he do? Purple. What are the colors? Purple, red, blue? I'm color handicapped. Let's do green. I know he's never worn a green tie. Not even good music. No, it's not. How about I get in that Zoom? There's no Zoom call today. That was hilarious though. When I raised my hand, whoo-wee. I'm color handicapped. So is it purple, red, blue? You ever wear black? They don't support you? That's crazy. They support me, Tyrone. Yellow or gold? What? There's no yellow or gold. Hasn't been announced yet. All right, I gotta Google this. Orange. What color ties has Jerome Powell worn on FOMC days? Red tie. You know what? This might be a good task for the old AI. Pink tie. Ooh, pink tie. He's coming out. He wants the world to know. That'd be funny. Purple tie. Beyond purple. Icy blue. Oh, yeah, the icy blue tie. Red ties. That's it. Okay. Purple, icy blue. Ooh, I like that icy blue one. Icy blue, purple, red. We're going to add green. He's never worn green, but send it. I'm feeling lucky today. Let's go. Powell will begin speaking here in just 2 minutes. He's usually a little late. But scheduled to be live in 2 minutes. Zoom it in. Here we go. It's already a hell of a day, my friends. Hell of a day. I didn't think that they would make any mention of the balance sheet, to be honest. But it seems like that's what everyone's looking at. They voted 11-1. It seems like they're pretty on the same page. New vote, new poll. What color will his tie be, my friends? Purple, red, icy blue, or green? I will, for the fairness of this poll, tell you he has never worn a green tie. That would be like the parlay. You got like Jerome Powell wearing a green tie. Lakers take it. Curry shoots 10 threes in a game. There's your parlay. Going with red. All right, seconds to go. Grab your brews, roll up. It's time, my friends. If you have not subscribed to this channel, subscribe right now. Tyrone Drain. The alert box is off. I appreciate. I know it's not off. I appreciate your super chat, brother. He says, "Get this man his flowers." Thank you. Hit the like button. Wise friends. Hit the like button. Subscribe. Check out the links in the video description below. If you're looking for exchanges, you're looking for trading tools, we got it all. Sign up with any of them. Get into our VIP section in Discord, discord.gg/TomCrown. Check out crownanalysis.com after the live stream. We're going in any second now. God, I wish Gina would be there. You know what sucks though is we lost Gina and we lost Asian Gina somehow. It doesn't even make sense. Like, it was like almost as if Asian Gina was just there because Gina was there and then Gina left and Asian Gina left. Like, that's a rug. I'm tired of getting rugged. Everything's a rug. It's all a rug. I just want it to be real. Could it be real? Someday. Here we go. This is some real vibe and tune. Da, da, da. I don't know why. Do you guys notice this on my trading view? There's just no time down here. Like, what is that? What's going on? Now it's there? What's with that? That's different. Don't know. Did not know. We have Bitcoin, the dollar, gold, and stocks up here. We'll be watching them live, and here we go. Everybody shut up. Shut your mouth. Shuffle the papers. Good, good.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Mr. Powell, stop moving your head so much, bro. Keep your heads.
Howard Schneider with Reuters. Thanks for your time.
Shut up, Gina.
2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because, you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Who is that? Lady in the green. Shut up, Kobe. Lady in the green.
Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Gold all-time high right now. Right
Nick Timrose, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. You know, I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low 2s in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Girl in green.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly, And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Girl in green, girl in green, girl in green.
Craig Torres from
Scammed
Bloomberg
again.
News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, you know, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, you know, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. You know, we haven't had real price stability fully reestablished yet, and we have to keep that in mind. And you know, we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Rena. I'm writing a complaint.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those. And you know, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging you know, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal, and then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
You know, there's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, there could be within 12 months a 1 in 4 chance of a recession. So the question is whether whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, you know, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Bitcoin is pumping. Green Gina.
Hi, thank you, Chris Rugaber at Associated Press.
I'm tired of being rugged.
As you know, I guess last night President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, I just
Jokesters outta here.
Maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. You know, we look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but you know, nonetheless we take notice of it.
Thank you.
Rena. I swear to God.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Bitcoin's pumping.
Yeah, look, we're aware of we're well aware of how things are going to evolve and the time frames and all that. And you know, we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty. And we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. You know, these decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Via dual mandate, I'm going to have to fight these people.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain, and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. And we'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, you know, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
You know, it would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, you know, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, you know, which for some time was kind of our problem. Now it's slow, but it's definitely, you know, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
More questions from Kelly. Last name.
Hi, Victoria Guida with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Polish on green.
Claire Jones, Financial Times.
I love this lady.
You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what speed, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down, they tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Higher high for SPY this week.
Hi, Chair Powell. Neil Irwin with Axios.
Sure,
Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside.
All-time high again.
So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
What about Bitcoin?
Matt Heaton with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. Beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to our uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but, we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
A lot of hard data talk since Kelly spoke. Just saying.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, higher levels to pretty close to 2%, while the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France-Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
You know, it was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And you know, it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, you know, pretty strong support. I'd just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. You know, we're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
Run, Chair Powell, run. Kelly O'Grady. Ever since she came into our lives just minutes ago, we've heard talk of hard data. I'm going to leave that to you guys, what that means. Thank you for joining us for another FOMC. This one was wildly successful, lived up to its name as the biggest, most important FOMC of our lives, as they always do. While there's no interest rate change, and it doesn't even really seem like we're getting closer to one, we did get some very bullish news. The Fed slowing down their balance sheet runoff from $25 billion to $5 billion for an 80% reduction was apparently what markets were looking for. The talk of uncertainty clouded the event, obviously, as gold moved to all-time highs multiple times. Someone said, "Oh, I jinxed it." Brah, that wasn't even it. It hit an all-time high earlier than that. We're still at an all-time high as of yesterday at this moment. Uncertainty was a big theme. Chair Powell repeated it over and over again. However, they're clearly feeling confident enough to change the balance sheet runoff. S&P 500 seeing some strength here, filling gaps. Bitcoin up, down, left, right. Not quite in the same position, but stocks did hit a higher high for the week on this run. Bitcoin breaking above, oh, Lord knows, 85,986K. Certainly not getting us out of trouble, but looking healthy, as we've been saying for the last, week plus. Healthy on these lower time frames. Looking for a break up, but maybe not the pump we're looking for. We will cover the notes in 2 weeks of this meeting. You better tune in for that. We cover all the FOMCs here. We cover all the U.S. crypto conferences, everything. Make sure you subscribe. Make sure you've joined our Discord, discord.gg/TomCrown. We will be live again at the latest on Friday. I appreciate you all. Much love. Greena.